Bitcoin rallies 25% in a week, taking it back to all-time highs. Meme coins go crazy as retail get back involved. Smart money in Bitcoin options seems to be taking profit on calls, but our friend Michael Saylor just keeps buying more. All this and more in this week's Crypto Options Unplugged. Hey everyone, welcome back to the show. I'm Imran Nijhar from Options Insight. I've got Dave Brickell with me from FRNT Financial, and we've got a special guest today, Manvir Nijhar, ex-head of SocGen's equity derivatives in the UK, and now a massive crypto punter on Deribit. How you doing, boys?
Good.
Great.
Yeah, really good. And welcome, Manny. Good to have you here.
Thank you. It's been great to be here. I think I've been watching this and listening to you guys for a while, so I thought it's inevitable I've got to join.
Yeah, no, it's good to have you, man. This is what we want to do. We want to get as many crypto players on here as possible to talk about this stuff. So another ridiculous week. Bitcoin up 25%. You are getting wealthier by the week. I unfortunately didn't participate that much because I got hedged too early. But tell us, man, what is going on? What is driving this move?
I mean, look, it's still the story is still the ETFs, right? I mean, that demand supply dynamic is huge. It's not abating. I think yesterday it was record gross inflows into the ETFs.
It's getting faster, so it's accelerating.
Yeah, like both BlackRock and I think Fidelity had over 400 million each inflows. And again, I have to put this in the context of like daily supply of Bitcoin is around $45 million. So, you know, if 400 million, call it, into BlackRock is almost like 10x the daily supply. And now you're seeing it so we're kind of seeing like 20x plus of the daily supply of Bitcoin going into these ETFs. And you're seeing more like wealth management platforms and stuff adding the ETFs to their platforms. So we continue to open up these pools of capital that's pouring into the space. And
think about it, every wealth manager who's telling their clients to buy Bitcoin is saying, buy it now before it's too late because it's going up 10% a day or 5% a day, right? So there's this FOMO that's kicking in that isn't just retail FOMO, it's institutional FOMO. Right?
Yeah, it's huge. And we've spoken before about this idea that, you know, you start off with like a small allocation because you know it's volatile and what have you, and then it's by far your best performing part of your portfolio. Totally. So then you kind of then start to think, well, if I just allocated more, you know, so you start to think I'm going to scale it up to like 5% of my portfolio. So I think those that have already allocated are probably going to be sizing up more, and then you've got the FOMO of everyone else coming in. So I don't see what stops it. I think that's the and the question that everyone wants to talk about is where does it end? For now, it's not clear to me what stops it, and it's like real demand. It's not like it's all like just leverage sort of specs, you know, just punting around. It's like real flow, and I imagine it's pretty sticky flow, right? It's going to sort of go there, sit there. So yeah, and now maybe like the first signs of frothiness, I guess, is with some of the meme coin stuff that's going on. Our CEO,
let's be honest here, boys. Who owns any meme coins? Do you own any meme coins?
Do you know, I got some Dogecoin, which I kind of forget about. And I bought it ages ago just with a few of like, Elon Musk is going to make it the currency of Twitter, so I should just hold that.
Yeah, I saw a tweet about that actually, saying, you know, when is he going to announce that there's like payments, like X payments using that? Right?
Yeah. So I hold it for that. I mean, you look at some of the moves in some of these meme coins, and again, it's not something I ever really get involved with. I you know, and
it's a bit of fun, isn't it? Really,
it's a bit of fun, and again, it's like, you know, if anything's going to wash out overnight, it'll be those as well. So, but it's funny. Our CEO at FRNT, Stefan, said in a chat today, like the meme coins are like the new kind of NFTs or ICOs of previous cycles. So like retail's back in, and that's kind of been missing from this move. So that's interesting, and that probably means, and it still feels early. Like if you look at measures of of like Google searches and all this other stuff, it still feels like retail are only slowly sort of like coming back in. But
so Manny, tell us a little about your journey into crypto then, because obviously you're like me, ex-banking, you're ex-banking as well, but you were in the equity derivative space. So yeah, how did you get into it? You know, what is your views on it now? How do you look at it?
Yeah, I think it dates back to what seems like a lifetime ago, which was the second lockdown that we had. So I think it was early 2021, where for kind of 3 months you're locked at home, doing the day job and trying to find another hobby. And so that hobby became crypto, and very quickly I discovered Deribit. So I had an old colleague that said, "Oh, you know, crypto. There's options on crypto. How would there be options on crypto?" And I was surprised to see a relatively liquid options market on Deribit, which I never would have expected to see in the space. And then I was hooked almost immediately. I kind of felt like maybe what options traders who traded equities, for example, equity derivatives, back 30 years ago, they would have felt trading options in the 80s and the 90s. And that's what it felt like, right? It was very, as you said, very retail driven, very FOMO driven, some of the price action. So it just felt like there was a lot of opportunity in the option space that you could find that you could never dream of finding in traditional finance options markets. And then that ended up growing, became a bit more than a hobby. And yeah, kind of similar to what you said, I think the amount of assets that have gone into the space personally has kind of crept up and up to a point where it's not creeping up anymore.
Someone put a question out on Twitter saying what percentage of your allocation is in crypto, and it's like some people are like 100%, whatever. But all the ex-TradFi guys like, yeah, we started with like maybe 2 or 3, but it's turned into 15 or something. Right?
No, look, completely the case. I think the good thing is, I suppose, playing with the options market and trading it. There's plenty of ways that you can hedge out your exposure, and so don't have to be kind of tied to the swings that we see in the market, and can hopefully participate even more so when things, and if things do move downwards, right? So
that's exactly what I did, yeah. Because that's right. You don't the decision to liquidate all your holdings, take the tax hit and pay the tax and all that stuff, you know, that's a harder decision to make. But if you've been long for a while but you're kind of a bit nervous that, okay, we've done a lot and you don't want to be exposed to a 20-30% drawdown, you can sell some futures against your holdings on Deribit, or you can buy some risk reversals or whatever. And that's not a decision to just liquidate all your stuff. And you can always take those hedges off if you don't want them anymore and trade actively around it. And I totally agree with you. That's how I've been running mine as well. And I just think having it parked there on Deribit, as long as you trust the exchange, which I do, right? And you're not someone who's desperately wants to be on a decentralized exchange or have it in a cold storage wallet. If you're happy with having it on an exchange so you can actively hedge around it and trade the swings and maybe gear up through calls if you think a big move's coming like we've had recently, I think it's just a great way to manage it.
No, I completely agree. And then I think what we saw maybe for what felt like forever, but it was maybe a year and a half going into probably October, November, is just the volatility kind of sucked out of the market for such a long period of time. So just things weren't moving. The options market wasn't that exciting. And you kind of needed some sort of reinvigoration in the market, which we got and more. I mean, beyond belief, I think what we've seen in the last 4 or 5 months. So it's just the opportunity set that's there. I mean, if you're trading volatility, which I'd like to say that I am, I mean, you want to be in the market with the highest volatility, right? Which is crypto.
By a country mile.
Yeah, it's funny because I think when I left traditional finance, I think like Eurodollar vol, I think it might have touched like a 4 handle at one point.
Not far off there now.
It's not. I'm not even.
Your FX vol's about as low as I've seen it in years.
Yeah, so like you think of that, and then like you've got Bitcoin vol trading on the 70 handle or wherever at now. It's like like I kind of feel like to some of my ex-colleagues and stuff still in the traditional space, it's like why would you not want to come in and like apply those trading strategies like here?
I think some people are still really stubborn. They're like, if they don't believe in crypto and they still think it's a Ponzi, even though you've got BlackRock selling it to people now, right? They just want to dig their heels in but I always looked at it from the perspective that I don't care whether it goes to 1 million or goes to 0. I can trade the swings because options allow me to do that.
Yeah.
And they're quite liquid options.
I think,
so why would I not do that?
I think that's the thing as well. And like you sort of touched on it. I think people are surprised like how sort of liquid the market is, how tight spreads are. I think people think like spreads are going to be like ridiculously wide, and actually it's quite a developed market.
Definitely.
Now, so it's very, very tradable.
Yeah, I mean, I think the bid offer spread in implied vol terms, which is how option traders look at it, is tighter than like single stock options in Europe by a mile.
I completely agree. I mean, we're touching upon 80 vol this morning in the front expiries. But yeah, you're exactly right. From a vol perspective, that bid offer is very, very tight. And as I said, people be incredibly surprised to see that. And with the thing is, it's not just the vol level that's very, very high, i.e. the implied vol, the options market is expecting vol to be. I think if you look in traditional finance, you look at single stock options or index options, kind of where the market is pricing volatility versus where it actually realizes and how much it actually moves, are more in lockstep. Yeah, they're sometimes higher, sometimes lower. But what you get in crypto is that lockstep getting completely out of whack, which you've seen in the recent past, right? Because although the markets have, implying that 80 vol, which is like a 4% plus move a day, right, in crypto, but the realized is considerably less, even if you extrapolate for a week and beyond. So the opportunity set, I think, is more so to exploit some of the strategies that you would exploit in traditional finance, but it's more exploitable in crypto to make more money. But the other thing I say to people is you can make more money more often, because the volatility of some of the implied vols or some of the term structure and some of the other parameters that go into pricing options can whipsaw so much, and it has done again since November, December last year, that you can get in and out of trades that in traditional finance would take you 2, 3, 4 months to make a certain percentage return.
Yeah.
In 2 or 3 days in crypto.
Yeah,
and that doesn't
vol, right?
Exactly. And that's not just the front week expiries. We've been talking about playing in March, April, May, June expiries. So it's that opportunity set, I think, which makes it very attractive from a traditional finance point of view.
So what about ETH? I always talk about ETH.
Yeah,
It lagged behind by about 10% last week. Bitcoin was like, give me back the baton. I'm going to show you how it's done. Is it a case of until the halving's out the way, ETH's just not really going to lead? Or what do you think?
I don't know, like we're seeing it perform pretty well today, right? It's outperforming today. Like I say, I think with Bitcoin, you have just a real demand. Like it's like real demand. There's a real flow there.
And it just overwhelms the supply.
It's just overwhelming everything,
yeah,
right?
Yeah.
So I kind of think, but I think you are starting to see some of the rotation out of it. I think the difference before with these moves is that Bitcoin leads, and then people kind of rebalance and kind of come out of their Bitcoin and then into, as we say, going further down the risk curve. I think that's happening. But at the same time, you've got this completely new pool of capital coming into Bitcoin. Now, when the ETF for ETH gets approved, I think you're going to have the same dynamic.
Yeah, for sure. Well, if this is any guide.
Yeah.
Yeah.
And it'll just be that constant sort of flow of capital into it.
What are you saying about the risk curve? Aren't people just saying, to some extent, so I either want Bitcoin, because for whatever, I want an allocation in Bitcoin, or I want the meme coins, and they're kind of forgetting about the middle spectrum.
Yeah,
right. Yeah. It feels like that's happening a little bit.
Yeah, a little bit, and you have to remember as well. Some people, like you've got managers, right, who will allocate to crypto, and they have to have certain weightings and stuff. So you've got that natural sort of rebalancing that has to go on. And then all the silliness comes in, right? Because then also we've seen it before. We've seen the movie like play out before, so you kind of know that all the silly stuff's gonna pump. And again, it's like caution, do it with caution. But you kind of know that that's gonna start outperforming a lot of stuff. But
all right, so I've got to ask you both, right? The way things are going. So when's the halving? The halving's middle to end of April. Right. So what is your Bitcoin prediction for where we're going to be by the halving?
100K.
100?
Yeah.
What about you?
Yeah.
But by the halving?
Yeah, by the halving, yeah.
I think a little bit less optimistic. I think 80k will be touched. 80k will be
80k is
touched.
going to happen next week, but
Yeah.
okay.
And I don't typically, and not to sit on the fence, I don't like doing like price predictions because I'm more about like just
No,
directionally
exactly,
where
but
are we
it's a bit of fun.
heading, and obviously
Yeah.
not financial advice and all that. But I think at the moment I just don't see what stops this dynamic. And then I mean we've not really touched on the macro yet, but the macro is actually becoming. I've been saying for a while it's been a headwind because like rates were going higher, dollars going higher. Dollar seems to have topped out and rates seem to have topped out, so they've come quite a bit lower. And one interesting thing that happened last week, and again it's something like a bit of a sort of macro geek like me sort of will feast on. So the Fed's Waller made comments last week about he would like to see the Fed's Treasury holdings take a larger share of the shorter dated securities. And so he's talking about this, what we'd call like an operation twist, where they essentially come out of some of the longer dated treasuries into these T-bills. Now, why I thought that was interesting is we've been talking about, like for me, a lot of what's driving markets and equities and everything, like where's the liquidity coming from? It's this insane debt that the US is, it's insane. And like gold's at record highs, Bitcoin's about to go to record highs against the dollar. So you've got this insane amount of debt. I think just last week in 4 days, like the debt in the US was up 100 billion. It's like the numbers are mind-boggling, but it's being funded by issuing shorter dated securities, and that's being funded by money coming out of this what we call the reverse repo facility, the RRP, which is cash that's been previously sat at the Fed overnight, coming back into the market just to pick up a bit of higher yield in the T-bills. That money's coming out now. When that goes to zero, that's when I've been saying that's when things could blow up, like T-bill, because how are we going to fund it? And eventually it'll have to go onto the Fed balance sheet. There's no other way unless they're going to let the Treasury market blow up. Now, so it's interesting in the context of that. And I kind of think, I've been saying like end of March, April time, we could actually see the RRP back at zero. The Fed have already started to say they'll stop or they'll start to taper the quantitative tightening as we approach zero on that. And then it's like, okay, that's fine. But when we get to zero, how are we funding this deficit? That's the question. And will things blow up before the Fed come in and go, right, we'll do some sort of operation that it's not QE, but it kind of is really QE. Well, now those comments from Waller is the first indication of we're going to have to start sort of shifting things around and start buying up the front end. Now, at the same time, if they end QT, that means there's less supply going into the back end. So I don't want to lose everyone on this. But effectively, we might have the Fed buying short-dated treasuries at the same time as we're seeing less supply in the back end. And it will look and feel very much like QE. And I actually think gold kind of ripped.
That's why gold exploded.
Yeah,
right?
gold exploded.
Yeah, it's going through the highs.
Yeah,
as we speak,
yeah.
right?
So it's kind of, and I'm seeing some accounts that say, oh, it's because actually it's picking up on all is not well. Again, I just think it's picking up on this liquidity. Yeah, and and that's what we're seeing in crypto.
So it's an admission. So gold is basically like a barometer of that Waller comment. Looks and smells like QE's coming again.
Yeah.
Even though they're not going to call it that, but to all intents and purposes, the operations that they're going to be doing will look like QE.
Yeah,
right?
and it's often
it's crazy, isn't it? QE at all-time highs in all these assets, and they're essentially just going to be doing kind of QE.
And the thing is, right, I bang on about these things. I mean, I was like rates and liquidity, right, are my two key drivers for Bitcoin and markets. And like when I remember like banging the drum when Yellen came out like last year and basically started to pivot towards issuing more front end securities, and it was like, well, that allows all the RRP money to come out, and there's $2 trillion at the time that in the RRP,
and that all went into markets.
Yeah, and everyone kind of goes, yeah, okay, and then get back to it's the economy doing this and the other. I'm like, it doesn't matter. You've got $2 trillion is going to come into this market over the next however many months. We've still got, I think we're down to just above 400 billion. So anyone who wants to get short equities, and we're having a little bit of a correction now, that's what you're battling against. Yeah. That's what you're battling against. And now if they start looking at other ways to kind of fund that, then you're going to constantly be battling it. And ultimately underpinning all of this for me is it's this currency debasement. And that's why I kind of, when we start talking about levels for Bitcoin, you want to sound sensible in kind of your targets, and the 100k doesn't sound too ridiculous. 150, doesn't sound like really silly. A million kind of, you feel like you're going to sound a little bit stupid saying that, but who knows? Because
I think we have to talk about Michael Saylor now.
Yeah.
Now, I obviously said, as a bit of a joke, Michael Saylor should pay back his debt because of how many billions he's made on his holdings. Obviously, I said he was going to tell me where to go. So now there's been news that they're going to issue a new convertible note at whatever rate, I don't know, they're getting, and they're going to buy more Bitcoin with it.
600 million.
$600 million more Bitcoin they're talking about purchasing, or rather than paying off any debt. They're actually raising more debt potentially, being in convertible, so that's kind of half debt, half stock, let's call it. And they're going to buy more Bitcoin with it. So that is well and truly the opposite of what I said he should do, but that's why he's a billionaire and I'm very much not. But I just thought it's funny, like that stock was up 20% or more yesterday in a day.
Yeah.
There's also chatter about it being included into the S&P, which that means a load of tracker funds, a load of passive money is going to have to buy MicroStrategy, which is going to push MicroStrategy higher, and then he's probably going to buy even more Bitcoin the more his stock goes up, because he'll be able to do things like note issuance and stock issuance. I mean, it's unbelievable. It feels very much like Michael Saylor is trying to corner this Bitcoin market and realizes that there's literally no supply. There's loads of demand alongside him, and it feels like he's arbing the system here, right?
Yeah. Yeah.
It's amazing.
Yeah.
I have to say, it's amazing.
I mean, it feels like, I mean, we were speaking before about this, like it's one of those, like it's amazing, and it's like this kind of positive spiraling dynamic, but you also kind of go,
feels scary.
It feels scary, because does that at some point all unwind?
Which is why you should buy some risk reversals. All right. Well, anyway, let's jump in on what I saw in Vol this week, and then we can have a chat with Manny to see what trades we can do on the back of it. Okay, so jumping into what we saw this week in terms of Vol. This time last week, we saw a little bit of a pop in realized back from sort of 30 to 40%, but my God, it has motored. And it's gone up all the way to around 70% on realized. That's on a 10-day basis. And you can see really the reason is because we've had some staggering moves, the likes of 8% on a couple of days over the last week. And that's not really what you see very often. Now this, I thought we were already looking quite toppy in Bitcoin last week, but then we've gone and rallied another 25% odd. So we saw this 9% rally on the 28th. We saw another 8% rally just yesterday, and Bitcoin really having a go at taking out all-time highs and it's getting the market very, very excited. All right, looking at the flows that we saw, it's interesting because on the upside, we actually saw some profit taking. So we know we've seen a lot of call buying over the last few months. We've been flagging it in all the various places that we show you guys what's going on. But you can see these large orange bars here are March calls on the 60k strike, the 65k, and the 75k. So large blocks of these being sold back to the market, obviously in some good profits as people bought these when they were far out of the money and they've now gone in the money or at the money, for example. April calls also being offloaded there. We did see some rolling. So these June calls here, 60k strike, this is the purple bar, getting rolled up to the 75k. So that was a notable trade. And then some of these orange bars here is put protection buying in March. So people, thinking we've had some good rallies here. We've reached back to the all-time highs. Do we want to lock in some of these gains by buying some protection? So put spreads and risk reversals being used to protect the downside in March expiries there in Bitcoin flows. And just in terms of the amount of flows we are seeing, volumes have almost tripled in the last week. And we saw volumes of about $15 billion notional. And we've seen open interest hit a record as well in Bitcoin options. So really all the action in Bitcoin. Ethereum flows were higher, but it's more like 50%, and not really anything as exciting to talk about this week. All right, looking at term structure, we got the inversion in the curve. That's a very typical kind of move that you get when things go a bit crazy. So you get that front end spiking to around 80 vol as everyone rushes for the 1 week maturity where they can get the most gamma and they can really trade that realized vol. But you're even seeing a nice move in the back end of the curve as well. So front end of the move moving over 20 vol points and the back end getting dragged up about 7 or 8 vols there. And just repricing the entire curve really as crypto coming into its own and showing us what it can do. And for those of you who've been around the crypto space for many years, you would have seen moves like this and bull markets like this where vol can really get going. All right, so that's term structure. Jumping into the skew, you shouldn't be overly surprised to hear that call skew came back with a vengeance. So we had seen, this is a 3-month maturity, so we had seen it get back to about 4 vols. But you can see going back to around 6 to 7 vols in both Bitcoin and Ethereum. So really the whole curve catching a bid in terms of call skew yet again. Short end also doing the same, but those long end skews all moving firmly back towards calls. Now, we're not quite at the highs, even though we are going crazy to the upside. We're not quite at the highs in call skew, which got to about 10 vols in that 3-month. So there is potentially room to get further. But remember, that's probably because we are seeing some profit taking in the calls. If we weren't seeing profit taking, we were seeing more buying, then maybe we'd see call skew back to 10. But right now, that isn't what we're seeing. Okay, and then closing it out with relative value. Obviously, because Bitcoin's been driving the strength this week, outperforming Ethereum by about 10%, we have seen a shift back down in this relative vol spread between Ethereum and Bitcoin. So it's trading back close to 0 in the front of the curve. It's trading at a very marginal premium for Ethereum as we go into sort of 2 to 3 month buckets here. But you can see the realized vol, this 10-day realized, which is the yellow line, is all the way down at minus 14. So really a staggering outperformance of Bitcoin realized, dragging that surface back down. And the way it's doing that is by Bitcoin vol going up more than Ethereum vol, which takes the vol spread back down. So we'll see how long this can persist. Ethereum has started to show a little bit of outperformance today, out rallying by about 2 or 3%. But, it's miles away from its all-time highs. Bitcoin is at its all-time highs. If Ethereum was to get to its all-time highs, we're looking at another 30-odd% rally in Ethereum. And certainly this vol spread can go a lot higher if that happens. But right now, it looks like all of these BTC ETF flows are in the driving seat. They just keep coming relentlessly, taking this thing higher. That's where the leadership is. The halving is just around the corner, and everyone is just kind of now questioning, does Bitcoin go through 100K before we know it? So hard to see Ethereum outperforming in the near term as we've got all this strength and all this optimism in Bitcoin going into the halving. But I'm still a big believer in Ethereum longer term. I think June, September, those sort of maturities, I think Ethereum can very much come into its own. And I wouldn't be overly surprised to see Ethereum back above its all-time highs as we get into the second half of this year. All right, that's what I'm seeing for this week. Okay, so that was what I saw. What do you make of that, boys?
Yeah, I'll hand that one over to Manny. Yeah, be interested to see your
I mean, Gamma's been impressive, right? Those short Gamma players must have got run over.
Yeah, completely. I mean, just looking at that, the crazy thing is, and we were talking about it beforehand, is although the implied vol has got to what looks like very, very stretched, very, very high levels, kind of implying a 4% move a day, it's susceptible to, if on a day you don't have that big move, like Bitcoin is catching up today, but it was down a bit earlier today, front-end vol's already getting hammered. But it's also interesting to see what the realized vol has been. I mean, looking at Ethereum, not including today, the 1 week realized vol was like in the mid-50s, still the front end, even out to 1 month, 2 month, you could get like a high 70s handle in terms of implied vol. And so just thinking how to protect oneself from one coins, whereas maybe earlier in the year would have done something like selling out of the money calls, which are obviously very, very rich because of the vol, because of the futures, and using it to buy some put spreads to cover and protect the coins. Now, given the momentum and the worry about being short too many calls, unless they are, or feels like, and we said what's crazy, but what I thought would be crazy out of the money calls. I think what makes sense in this type of vol environment, I've been trading put ladders. So what that means, I've been buying close to out the money put, but because the vol is so high and obviously making the puts very, very expensive, I sold an out of the money put and then a second out of the money put, maybe a bit further down, So my net position is actually benefiting if the vol comes down, earning some time decay. And also the thinking is if the market drops, because crypto for quite a while now has been in this kind of spot up, vol up environment, whereas if spot goes down considerably, typically we see volatility ease off because of how people are using the option space. So with that in mind, thinking actually if we do drop, to do the strikes wide enough such that if we do come off, the vol eases, and actually hopefully make money on delta, with the delta, the very out the money options hopefully going close to zero, and then having the opportunity to restructure that. But just doing sensible trades right now to cover your coins, because although obviously there's these big projections and these real flows going in, hoovering up the supply, or multiples of the supply, there's also kind of taking a step back and saying technicals are very, very, very stretched right now. Funding rates are very, very frothy. Implied vols are very, very frothy. So just being a bit prudent in how to manage your positions right now. But on the flip side, you know, we mentioned Ethereum, right? Starting this morning to kind of catch up potentially to Bitcoin. The question is, and this is what I've trying to be kind of battle with in my head, does Ethereum catch up to the Bitcoin moves pre an Ethereum halving? Are people trying to front run it?
The Bitcoin halving. You mean?
Yeah, the Ethereum ETF approval rather. Ethereum ETF approval. So if the ETF approval or the expected ETF approval happens in May, how do we see price action going into that? Does it see following Bitcoin's path? Or do we see people front running that and maybe all-time highs are reached ahead of a potential ETF approval, which wouldn't surprise me, right? Because as we saw Bitcoin reaching all-time highs this morning, as soon as we saw that, suddenly we saw the ETH Bitcoin ratio pick up on the back of that. Maybe people were thinking that. But yeah, I mean, a trade I put on this morning on Ethereum, for example, because all those parameters are so stretched, I thought I want to participate a bit more in Ethereum, but do so in a very protected way. So what I did, I purchased the 3,700 call with March 15th expiry, which is next Friday.
Yeah.
Against that, so that alone would have cost me $200, which is very, very expensive given given where the futures curve is priced and given where implied vols are. So I thought, okay, how can I cheapen that considerably? So I sold a 4,000 call against it. That almost halved my premium, but still, like, it felt like paying 100 to make 300. I can do better than that. So what I did, I took advantage of the vol to sell a very wide strangle against it, also in 15th of March. So what I considered a crazy out of the money call, which is the 4,400 call, and also I sold the 3,200 put against it, right? Net, that whole structure cost me about $30.
Nice.
So for $30, I have participation of $300 rise in Ethereum, knowing that as long as we don't reach 4,400, i.e. close to all-time highs by next Friday, it's a 10 to 1 shot. And on the flip side, if the markets fall back from here, assuming we don't drop below 3,200 by next Friday, which will be a pretty steep drop, I've only used $30 to actually participate in this.
Yeah, so I think the general sort of message here is optionality is expensive as it is. You can construct some quite nice break-even trades by being a net seller of vol, right? So your approach seems to be, correct me if I'm wrong, that you like harvesting this expensive vol and kind of allowing yourself to have very minimum theta, low cost trades on that give you potential scenarios where you can make 5 or 10 times your spend, basically.
Correct.
Right.
No, correct. I think I generally like being an earner of theta and time decay, so that I think that puts you in a position to make better decisions going forward. I think the worst is you're paying theta and then you're crossing your fingers, hoping that the move you want to happen that benefits your trade or portfolio doesn't happen. Maybe you make some emotional decisions on the back of that. But it's just in this environment, I guess the key is to be pretty wide in your strike range that you choose, right? Because of what we've described has happened and can happen going forward. When vols are this high, it does give you the benefit of being a bit more prudent in your strike selection.
And what are your sort of max payout ratios? What does that look like in terms of? I thought you said earlier like 10-1 payout or something.
Yeah. So for example, for the one I put on this morning, something like a 10-1 payout. I mean, what I like to do, I try and like to do trades, not necessarily a lottery tickets, but give me a decent chance of a high return on premium rather than a lottery ticket trade, right? Taking advantage of the term structure and so forth. I mean, there are some exceptions. Like early this year, post the Bitcoin ETF approval, as soon as we touched 49K, obviously we kind of crashed down, and then we sat there for a number of days. It felt like an eternity at the time, right? And then you saw vols very fast react on the way down, where everyone just got rid of options, vol plummeted. And so back then was, I guess, a relative rarity where I saw an opportunity to buy call options with March expiry. We still had a good couple of months to run, but fully financed by selling some very out of the money call options on June, thinking that the implied vol at the time of March options are about 10 vols below June, like 42 versus 52, which is quite an extreme difference, right? So I'm thinking, well, I'm going to be paying time decay for this structure, but the realized vol at the time was actually in its early 50s. Thought like a sensible trade to do at the time, and
so the reason why that got so steep was because there was still ongoing call overwriters pushing down that mark.
Correct.
And they've all been run over, clearly, or they bought back their calls on the way up, as we said they were going to do. Something I'd like to add about that I've noticed, though, is quite interesting, is that the call skew in Ethereum in the long end of the curve, like June, September, December, is actually more expensive than the Bitcoin call skew. So even though Bitcoin out-rallied by 10% last week, the longer dated upside in Ethereum is trading at more of a premium than Bitcoin is. So it tells you that the option players are very much wanting to own that longer dated out of the money tail in Ethereum, because they recognize that later this year, the Bitcoin story is going to be kind of done. The inflows, whoever wants to allocate probably would have allocated because they're trying to front load it into the halving, and the story becomes Ethereum. And if Ethereum can do anything like what Bitcoin's done when it's got real buying flow, again, we don't want to predict, but Ethereum could be at something stupid like 8 to 10,000, right? Because it probably doesn't have the liquidity that Bitcoin has to be able to absorb that buying, right?
Yeah, I mean, it's and actually it is interesting, like that in the option space are perhaps positioned for it more than what you kind of see when you're just looking at spot price action, right? But it makes sense. Like, it makes complete sense. Is there like a bump around like the May dates?
No, not now. I mean, now the curve's gone inverted, or the front end's gone higher.
Right. Okay.
If you were in a normal contango curve where the front was trading at like 40, 50, and then you were upward sloping, and you'd see a bit of a premium in like April or May. But now, because the front's gone ballistic because of the type of moves we're seeing, you can't really see that kink anymore.
I mean, in the longer dated Ethereum, I mean, I had coming into this year, call skew was still relatively rich on the back end. So just use that to have a bit of a long-term play of, owning out of the money call spreads in Ethereum, kind of sell the 20-ish delta Ethereum, just holding that in the back book, right? And balancing the rest of the book to be able to pay for that. And even as we rallied in ETH, I mean, just taking the decision just to roll further up and out those type of positions, take a bit of profit in the ones that have now gone in the money a lot earlier than expected, but then roll that further up and out, as you say, using that call skew to have some kind of, some decent upside exposure in ETH for the longer term, but without necessarily paying for that very, very rich call skew out in September, December.
And I'll tell you, I'm excited about Deribit listing the Solana options.
Yeah.
Because they're coming online in the next few weeks, I think. And if you look at Solana, I say the Solana Ethereum cross, that's been grinding lower. So you had a really explosive move at the back end of last year in Solana, where it outperformed everything. But it's actually been underperforming quite massively compared to Bitcoin and Ethereum over the last month or two. So that is setting up for a nice entry to own some Solana upside, I think, right? And Bitcoin and then Deribit are going to list it just the right sort of time. So
I think the timing's perfect for that. They pushed it back till Monday, I believe, right? Because of the price action. But I think, touch wood, looks like perfect timing for all.
Now, I think we will need longer dated optionality though. So I won't be overly excited about buying a 1 week or a 1 month call on Solana. But if I can get some 3 to 6 month calls on the book, I think that's worth spending a bit of premium on. So I'll be probably doing that.
The other good thing, I guess, which is maybe less talked about now, but in the coming weeks, we've got, which is something that I've been quite excited by, is Bitcoin, Ethereum cross collateral, right? So to be able to actually trade Bitcoin, Ethereum spreads in a margin efficient way, whereas obviously up till now, you had to do them as separate trades, so pay double the amount of margin if you have portfolio margin. So that will benefit more relative value players between some of the coins going forward.
Yeah, that's a really good point actually, because I do that trade quite a lot. It hasn't gone very well in the last week, by the way. I was short Bitcoin calls in June. I think they were like the 80k strikes. I was long Ethereum 4500s, but I purposely picked really far out the money stuff so that it wouldn't do me too much damage if it went wrong. And my God, it went wrong. So I've cut about half that position now. But then we've seen a bounce in Ethereum today, so it's kind of running at roughly break even on the balance, but. What a crazy move. I mean, I think it was just, that's the thing about trading. It's all about timing. Like you can be right on a view, but if you time it wrong by 2 months, you can get buried, right? So you've got to basically put on positions, know your risk, and at some point just say, okay, I'll hold my hands up and I'm wrong and I'll cut the risk. So you want to try and put on positions that when the market tells you you're wrong, you've still got an ability to get out without too much damage, basically, right? And that's why I like some of these trades, like you're saying, the net selling vol, because particularly when vol's already pumped. So, for example, those put ladders, I think you'll get a chance, even if you're wrong and the market starts moving down too quickly on the put ladders, because the vol is likely to reset lower, you'll have an out on that trade if you do it. So I think I'll probably be putting on some put ladders as well, because I'm sick and tired of trying to sell calls, even though they're covered calls in crypto. The problem with selling covered calls is you think you're happy to let go of the upside because you own the underlying, but then when the thing rallies 25% in a week, you feel aggrieved that was a lot of upside that you gave up, right? So it's kind of, I think we're in this weird cycle of the market where, like you said, we could be at 100k by April, right? Yeah. So how are you going to feel about being long Bitcoin at 50k? Could have doubled your money, but you gave it up for selling a call option. Yeah. You're not going to feel great about that, right? So I think now it's like, if you want to play a correction in markets, you want to look for these short vol plays like ladders that will make you some money on the way down, but won't give up all your upside.
Yeah. And if you're trading it on the inverted part of the term structure, or even out to March, right, which is trading for the first time in a while way above, felt like way above April and May, for example, trading ladders on that expiry, if, as you said, spot does go down, the assumption not only vol resets lower, but that term structure will reset back into contango. So you'll be able to potentially manage those short, very out the money puts, which hopefully have actually made you money by not necessarily just rolling down, but rolling further down the term structure where the vol is higher to give you some more wiggle room to play with. So it gives you that added benefit if and when that scenario does happen.
All right, we've probably blown everyone's minds now on that. Bit of a technical vol discussion, but why don't we give our key takeaways then before we sign out?
I think my key takeaway is it's the same it's been for the last few weeks. I just don't fight the flows. Don't fight the flows. Yeah.
Short and sweet. What about you, Manny?
Yeah, I think my main takeaway is just use the fact that vol is so rich to take directional bets whatever you want to take, whether it's a bullish or a bearish directional bet, but use option to cheapen significantly the risk of that bet.
And I guess I'll close it out with Michael Saylor. I think you're probably doing the right thing, mate. All right, that's it for this week. Thanks for watching, guys. We'll catch you next week.